The asset management industry in the Philippines has been growing at a clip pace, especially in the last year. I'm very pleased to be able to speak with Maria Theresa Marcial Javier, or Tere Javier, the group head of BPI Asset Management and Trust Group here in Manila. Thank you very much for joining us.
Hello.
Give us a sense of the size of your business and the profile of the asset management business that you look at.
BPI Asset Management handles about 460 billion pesos in assets under management. So that's about 10 billion US dollars. We cover a diverse range of products and services. We address both institutional and individual customers. So that's about probably 60% institutional and 40% retail and wealth management. In terms of revenue, however, the retail and wealth management segment accounts for a larger share.
Just breaking down further the profile of your business, how much of that is international money placed in Philippines and how much of that is domestically, organically grown?
Almost the entire assets under management is sourced from domestic clients. In terms of investment profile, we probably have about close to 90% invested in Philippine capital market.
Is there an ambition on your front to be more a repository of foreign investment in the Philippines?
Well, to investors who want to look at the Philippines as an investment, I guess as an investment opportunity, BPI is well positioned to be the choice of institutional asset managers or probably some high net worth individuals outside, except that right now the focus has really been on the domestic market in terms of sourcing clients. The reason I say BPI is naturally positioned to be the choice among foreign investors is, for example, we are running a set of index funds, which could be a natural choice among institutional investors. We're managing what we call the ABF Philippines Bond Index Fund, which is a peso bond fund. We have the Philippine Stock Index Fund, a passive fund investing in domestic equity markets. And we also do have the dollar version, which is the BPI Philippine Dollar Bond Index Fund. So to a foreign investor wanting to look at the Philippines, a natural entry point would be to look at specific asset classes, and that's where passive funds would be, I guess, a natural choice, whether it's peso bonds or stock fund or bond.
Give us a sense of the profile of the fund management industry and how that's evolved in the Philippines. How sophisticated is the Philippine institutional investor, and how sophisticated is the retail investor in the Philippines, especially in response to some of the products that you've just mentioned?
The entire asset management industry, as of based on the latest figure, it's close to 1.8 trillion pesos. So that's probably about 50 billion US dollars. It's a highly concentrated industry in the sense that the top 3 players account for about 60% of the market. In terms of the level of sophistication, I think there's divergence in terms of the level of sophistication between institutional and individuals. So this would be the pension funds, schools, foundations, some religious institutions would have some, I guess, higher than entry-level experience.
What percentage of your institutional investors would be state-related?
Well, we do have, there are 2 large state pension funds in the country. about 3 years ago, we were able to secure mandate for a portion of the domestic mandate. Of course, they also have external fund managers. But that's not a very big component of our total assets under management. It's quite substantial, but it's
So you work
not
the
that big.
corporate networks rather than the state net.
Yes, it's a large, it's our natural market for, I guess, the corporations that have corporate relationship with the bank. So the retirement funds of these companies we manage. And then of course there's this a growing segment of educational institutions and even religious institutions who are seeing some growth in terms of the size of assets that they are that in their fold, and more and more they look at banks and asset managers for investment opportunities. So the trend is from being self-managed corporations, religious institutions, and so on, as well as some state pension funds, to professional asset management.
So do you find that you have had to be aggressive and pioneer new areas of investors, or have you been growing your base on the back of the commercial banks branch network, for example?
It's both. On one hand, we look at, we're viewed in the market as an innovator in terms of new products and solutions. Like we pioneered index funds. We were the first to manage mutual funds in the country. And in terms of nurturing our strength, we are a big player in the pension funds management. We also capitalize on the strength of our 800-strong distribution network to touch a growing customer base, not just in Metro Manila area, but across the Philippines, especially the growing customer groups in the areas like Cebu and Davao.
Give us a sense of how the Philippine investor is evolving in terms of sophistication, both the retail investor as well as you've mentioned, some of the new funds that new investor base that you've been building, the educational funds, the religious institutions. Have you had to educate them, or is the sophistication growing as a result of the organic growth of the Philippines, for example?
We are seeing improvement in terms of the level of sophistication, but maybe not quite there compared to more mature markets like perhaps Singapore or Hong Kong. But if we look back compared to the last 10 years, I would say that the level of sophistication has increased quite considerably, and that I attribute to also awareness of these institutions and individuals to opportunities in the Philippine capital markets. For example, like corporate debt that has been raised in the capital market has grown enormously, especially in the last 3 years. The interest rate environment and the opportunity for investment in risky assets, like for example the equity markets, is gaining some interest among investors.
What are some competitive is the industry in terms of fee pricing? Is there a pricing war underway? And given the fact that the profile is really two major players and then everybody else, is there a need for greater consolidation? Do you see that you probably have to acquire a number of the small players in order to keep the price competitiveness in your favor?
Well, in theory, because the industry is highly concentrated, then there should be pricing power on the part of, I guess, the asset managers. But the reverse is happening, because these big players want to cement their leadership in the industry and want to gain more market share. So in the process, they